Hi everyone, welcome to Thursday, and today we are going to stick with the smart shares, and we're actually going to have a look at a sector called Smart Australian Resources, and it's an ETF. Just looking here on the Smart website, it says that it tracks the returns of the S&P ASX 200 Resources Index, and it contains companies belonging to the energy sector or the metals and mining industry. And I'm really keen to show you this to just see what you think. Right, so I have got ASR.nz up here on the screen, and I've got it on the 5-year chart, which brings the candles up to weekly. And you can see, looking at it, this has had an absolutely exponential run, basically from April this year. It has gone from a close of around $5.29 to $7.58. It's almost sort of vertical, that rise that has been happening here. You can see down the bottom here with the volume, there's also been really good volume on this particular share as well. What I like about the ETFs is that you have exposure to all different companies. You're not just relying on one particular sector like BHP or Santos or anything like that when you're doing an ETF, because you have all of those companies put together and your investment is spread across all of them, which is something that I really like. Let's go and pop our moving averages on and just see what they are telling us. So I always use the 30 exponential, and we'll also pop on that 15-week as well. Here we go. And yes, you can see that the 15-week moving average crossed through that 30-week at around sort of beginning of August this year. And it's just been an absolute phenomenal run. In fact, there's been very few times that this share has pulled back. Hey, obviously tops will happen at some stage, but I definitely like to keep on line with whatever the trend is showing us. And this is what this resource sector at this stage is looking like. I know there are a few anomalies in the Australian market at the moment. Some companies have slowed down. We've certainly seen their index slow right down and pull back, but this was one that caught my eye under the smart shares. That's something that I'm looking at the moment, is just the smart share options, purely because it's denoted here in New Zealand, so it takes away any potential international rules like the fifth rules and things, although they don't apply to Australian companies. But it also means that I'm getting exposure to a broad section of a market rather than just trying to go stock specific on one or two shares. I still have those positions, but using the ETFs certainly helps mitigate that, because obviously my risk is that if the resource sector in Australia suddenly takes a nosedive, it will affect obviously a portfolio like this. But there will be some companies that will still perform quite well, and that's where an ETF certainly has its advantages and strong points. It means you're not just nailing down to one individual company. Let's go and have a look at this 1-year chart. So it brings these candles up to dailies, and look at this basically beautiful chart that we've got. You've sort of got steps happening. It's very, very symmetrical. It's almost like a role model chart. What really caught my eye when I was doing my research, though, is when I look at this particular candle here, which was Friday. So not only is this fund making an all-time high, you can see that there's a gap from the candle before, so Thursday. That can and usually is a very good positive sign for any particular share. And if I look down the bottom, you can also see that there is a lot of buying interest in this particular share. So when you see a gap form like this, so that is where the share opens higher than where it closed the previous day or the previous week, that in itself is a positive sign. But it's also a more positive sign when you see a lot more volume happening at the same time. So that's what really caught my eye on this particular share, and why I thought, hey, let's share it with you and see what you think. I'm keen to see what you think on this particular share. I don't do too much more research on a share like this or an ETF. There are a couple of things that I do look at, and one is the MACD. So let's put that on. So MACD stands for Moving Average Convergence Divergence. We'll put on our 30-day for our fast period, and we'll change that to 15. And I'll just put the signal period over 21 days in this example. Now, what I'm wanting to see here is there really any divergence happening? So we're seeing the charts rising up. What are we seeing with the MACD? Now, this is the only thing that does concern me, and it almost looks like the share is about to start turning and going downwards. So that's what I would call a divergence. So what the charts are telling us one thing, but this indicator is telling us something quite the opposite. That is something that you do need to keep in mind when you're looking at doing your own research on a particular share. If I just put this back over the 5-year, we'll see what it says there as well. That can sort of almost be confirmed when you look at that MACD. It does look like it could potentially be trending down. Hey, I'll leave that up to you, but these are just certainly things that I want to look for. The only other thing that I want to put on is the RSI, which is the relative strength indicator. And I'll just leave that on a 14. So this is going to indicate whether the share is overbought or oversold. And if I look at this RSI indicator here, anything that's sort of 70 or above is considered to be overbought. Anything that's around that 20 or below is considered to be oversold. So when I look at this, it's certainly up at 75. So it does mean it's overbought. Now, just remember, overbought does not necessarily mean sell. What I'm looking for here is that pointing up, which it is on the weekly chart, and we will have a look on the daily, and it's still pointing up on the daily chart, which does indicate buying pressure. So the only indicator that is that anomaly, if you like, was the MACD. That was showing different to what the actual chart was saying and what this relative strength indicator is showing as well. Because just remember that if a share does have momentum, upward momentum, and it is tracking up, quite often, and you can see that with this particular chart, that it does create more interest and more buying. The thing to remember, though, is to use those trailing stops. Let's take these moving averages off, and we'll just see where a trailing stop would be if we put that on. I'll just take that back to the 5-year chart as well. And here it is here, ATR trailing stops, multiplier out to 4. Right, so here we are here. You can see that these blue dots, if you like, are the trailing stops. So what I use is the ATR. I times that by 4, and that is where I will put my trailing stop. So whatever that ATR is, times 4, I will take that figure away from the share price to see where my trailing stop would be. So at the moment, that trailing stop would probably be around that $6.22 mark, even though you're buying it at sort of roughly $7.58. That protects you. So it gives that share a lot of room to move, because as you can see, it does have that up and down movement. And that means that if it hits that figure, if the share has peaked where it is at the moment and it does fall back to that figure, it means that the system will automatically sell your shares. Takes that emotion out. It's quite binary, and that's why I like it. It's rule-based rather than emotional-based. Naturally, if the share keeps going up, and you can see that with these blue dots, you keep increasing that trailing stop. So at some point, hopefully, if a share keeps trending, you will end up locking in some profit. But in the meantime, you're protecting your capital, because the biggest thing that I always think for people is you've got to protect your capital. If you lose all your capital, it means game over and you can't play anymore. So I really hope that's helped. And hey, do remember that if there is a share that you would like me to review, or an ETF, doesn't have to be New Zealand based, can be anywhere, certainly more than happy to take a look at that and cast my eye over it and do a video and to show what I would be looking for. So I hope that's helped. And until next week, do take care.